In this video, we are talking about patterns. More specifically, we're talking about double tops, double bottoms, and breakouts. So the past few videos, we've been talking about market structure, more specifically placing support and resistance areas. On the chart in front of you, we're looking at S&P 500, ticker symbol SPY. And as you could see, we had a massive sell-off. We are currently way below the 200 moving average on the daily, which typically acts as a magnet. And we typically look for a bounce from here. You can see on the chart in front of you, I have placed some support and resistance areas in white. Figure they are pretty easy to see. If you're wondering what I was looking at when I was placing them, I was looking at this area right here, this area right here, which creates our line. Also, that bounce there. That creates our line there. And then, of course, this bounce here, and this bounce here. Now, this bounce here isn't touching, but it's a zone like we've discussed in the last video. If you have not seen that, I'll throw that up in the right top hand corner. Go ahead and check that out. It talks about how to read market structure and how to place support and resistance areas, zones, right? And the last line is simply the bounce here and this low here. And this white line, all I did was scroll back to right here, and we have our two bounces. Let me get my arrow. One here, support here, and then there's obviously two more here if you want to keep extending it, right? Makes sense? So far, so good. All right, we got our blackboard. So market's coming down. We find an area of lower rejection prices, then we have a bounce. Then we come down and attempt to break this area again, and we do not. And then we start coming up. Right? So as we start coming up, what we can do is we can draw an area of support right here. And as the market starts coming up, this is what's known as a double bottom. You have a bottom here, and you have a second bottom here. And the fact that the second bottom is higher than the previous bottom is giving us a double bottom. So what we do is we actually mark an area of support here and an area of resistance here in anticipation of the market breaking out. So far, so good. So first entry is on this breakout, which is an aggressive entry. Second possible entry, previous resistance now turns support, which we've learned in the last video that I did. So second entry would be on the pullback, and you could get right in at the structure, expecting possible move higher, creating another structure, right? We've talked about this in the previous video. That is known as a double bottom. And a double top is the same thing in the opposite direction. Market's going up, reaches a high point, pulls back, retests that same previous top, right? So we're retesting this here, creating a line of resistance. We have our line of resistance. Then, if the market starts pulling back down, we can expect a possible break of the neckline and a continuation to the downside, right? And then same thing, first entry on the break, second possible entry on the retracement, down we go. Okay, so let's back up few steps. If you're asking the question, well, how do I know if it's a double top or a double bottom? And the answer is simple. If we break through, it's not a double top. We broke through, right? It's a breakout. If we stop anywhere in this area and we don't break the first high and we start to pull back, let me get my arrow, and we start to pull back, then it could potentially be a double top, right? If we keep going, it's just a typical breakout, and then previous resistance now turns support, right? And let's get rid of this blackboard. Let's go back to the S&P, and I want to zoom in here and show you exactly what I'm talking about. So here's a really good example, I think. So we have support here, right? Market comes up, retraces, gaps, comes back down, creating a double bottom, right? So let me erase this. See these two bottoms here? It's a lot easier if you just draw this out. So we come up, we break the previous high, which is telling us that we're still bullish. Then we retrace, and we never break the low. We create a double bottom, and this is exactly where I drew the line of support. And then we come up. So now, so we're here, right? Retracement, break the previous structure high, come back down as a retracement, and now we start to come up. So our first potential entry would be the break of this high. And that's actually a little bit too high. You could take it right here. So your entry, let me change colors. Your entry would be right there. And then as it breaks out to the upside, you're in the money. I hope it's making sense so far. All right. And the next thing I want to talk about is a regular breakout. And I've gone over this a few times before. So market shoots up and we put in a massive candle. Let's see if I can do this with a box, right? So we have a green. All right. So we have a massive candle that comes up. Then we get a pullback, right? And even if these can even have wicks and it doesn't really matter. Let's say this one's got a wick to the upside. This one's got a wick to the downside. Actually, if the second one has a wick to the downside, this is showing us rejection of lower prices. So what I would be looking at is a break above this line here with a stop right here, right? This is typically how it works. So we can have something like this. And then the next candle would open here because we close, because the red candle closed right here. So the next candle would open here, and this is what we're looking for. Now it could do this and go higher, or after the break, what we could do is come back down and retest this area. Even with a wick, sometimes we have a body, and then we leave a much lower wick to the downside and retest this area. And then the next candle would be another breakout, right? So it's the same thing. If we draw this out, it's the same thing. We come up, we pull back, and then we start to come up, putting us on alert for a breakout, right? And then we come up, we break through, we pull back down into the same area, the same line. Previous resistance now turns support, and then we take off. So how do we know if it's not a breakout? So let's say those candles never happen. Let's just go back. So let's say we're here. Let me get my box again. And the next candle, next green candle opened, and we came up to here, right? And we didn't break it. And then we start to put in this red candle and start to head lower and then lower, right? So what are we looking at? Well, let's grab our line tool and draw this out. We come up, we come down, we come up, creating a lower high than the previous high, which is putting us on alert for possible bearish rotation. And then we start to put in red candles looking like we want to go down. So another possible entry could be into here, and then your stop would go right above this high. But I don't want to talk about entries and stops. What I want to talk about is just what we're looking for and how to identify it. So I hope this is making sense. The candles, they don't have to be that close. Sometimes what'll happen is on these candles is they can be a little bit bigger. So even if we had a breakout here and then another breakout here, and then we started to come down, right? And then we have red candles here, and then we double bottom. So then we start coming up again, right? So now, if you draw this out, here's what it starts looking like. We come up, we retrace, we come up some more, here's our high, then we retrace again, then we come up again to retest the previous high to see if buyers have enough strength to break through. And if the next candle that we get is red, let me get my red color, and then we start to do something like this, this is creating a double top. Here's our first top, here's a second top, and the expectation is to go lower. Same thing with the double bottom. It helps a lot if you draw it out. I'm going to stop the video here. I hope this has been helpful. As I keep making videos, I'm going to keep, I'll go through and discuss these in much greater detail. The idea here is not to confuse anybody. If you're trying to learn these, what I would suggest is find a chart and just draw these out. Draw these lines, pick a point, it doesn't matter. Start from here. Let me go back to white. It's easier to see. Or start from here. Or you pick a point and you start from anywhere and you just draw this out. So we go up here, then we go sideways. Let me fix that line. So we go sideways here, then we come up again. And as you continue to draw these out, you start to see, wait a minute, there's that double bottom. Then we come down, right into, this comes into previous area of support, right? So we have bottom here, and we have a bottom here, creating a triple bottom. And if it holds, buyers will step in, and the expectation for us now is to go higher. I hope you enjoyed this video. If you did, hit the thumbs up button, telling the YouTube algorithm that you enjoyed it, that there's quality content in this video so it can get recommended and help more people. And also, if you don't want to miss the next episodes, hit the sub button, hit the bell icon. YouTube no longer recommends every video just because you're subbed. So if you don't hit that bell icon, you're going to miss videos. So if you're enjoying this and you want to follow along, go ahead and hit the thumbs up, hit the like button, and I'll see you in the next video.